7 mistakes that property investors make when it comes to flipping houses. Whilst there is a huge amount of money to be gained through flipping houses, there's also a huge amount of money to be lost. With great power comes great responsibility. So in this video, I'm going to explain 7 pitfalls that most property investors make when flipping houses, so that hopefully you don't have to make those same mistakes. Number 1, choosing the wrong area. Now, a lot of people ask me what's the right area and what's the wrong area when it comes to choosing a house to flip. Now, a lot of people are, oh, what's a good area? And what they mean by that is, would you buy in Liverpool? Would you buy in Manchester or Sheffield or Leeds, Birmingham or London? Or they're asking for huge cities and big open spaces. And the reality is that there's good areas and bad areas in all of them. What I always look at when it comes to choosing an area, or not even an area, a particular street or particular property, is, are there proven sold comparables? If you are buying a house on a street where a house hasn't sold for the last 20 years, I would be cautious about buying it, especially if you're a beginner and especially if you're new to the area. I'd be cautious about buying that because there's no proven sold comparables. However, if you're buying a 3-bedroom terraced house and every single terraced house on there has sold in good and bad condition for at least £150,000 and you've picked yours up for 130, 120, you know it's going to be a good deal. So that's what I look at when choosing an area. I don't care about schools, I don't care about public transport, because the house prices factor those in anyway. All I need to know is what has been proven to sell in that area. Number 2, bad due diligence. A lot of people, when they run due diligence, and I find this especially with deal sources and deal packages, is they look at what has sold. So let's say they look in an area on a street and it looks like there's been 3 or 4 houses that have sold within the last year, and they range from selling for 150,000 all the way up to 200,000. Now, what I find sometimes people will do is they look at the best case scenario. So they'll be looking at things like, I think once we get this house and we do it up and we sell it, it'll be worth 200,000. Well, what about the ones that have sold for 150? What happens if it sells for 150? You cannot just always think best case scenario. You've got to think average, or, to be honest, erring on the side of worst case scenario, because you always want to make sure that you're doing your proper due diligence. Because when you come to sell it, if you end up having to sell it for less than what you expected, it may eat into your profit and may actually mean that you make a loss on the property. So when you're doing your due diligence, look at the worst case scenario rather than just the best case scenario. Number 3, overdoing it on the refurb. An example of this, I have a client of mine called Ben. He's done a video with us recently. He's got a fantastic property deal up in the north of England. When I went to have a look at it, he was asking me what I would recommend in terms of refurb, and he had some ideas about adding a hallway and making, like, adding a partition wall. And to be honest, the things that he said he wanted to do to the property sounded like it was going to be quite expensive. And when I looked at the area, I knew that the best they're going to do is sell that for about 100,000, and to be adding hallways and things like that, it doesn't actually add value. So when I was with him, I explained to him, you know, if you want to get the most amount of money out of this property, you need to know what adds value and what doesn't. So you look at a sold comparable, something else that has sold for £100,000. What's the difference between that house and the house you've currently got? What do you need to do to get your house from where it is now to where it needs to be to sell for that end value that you're after? Easy wins for adding value, I would say, is always your cosmetic stuff. So painting the house, new flooring, kitchen, bathroom, things like that really add value. New electrics, new plumbing, those things really add value. Adding partition walls or knocking down chimneys, things like that, that, to be honest, is only really, in a lot of cases, only just going to add cost to your renovation as opposed to adding value to the property. Number 4, using bad builders. A lot of people will end up using bad builders, not because they choose bad builders, but because they don't do their proper research on the builders that they're using. So I always say to people, when you're finding a builder, make sure you go off recommendations of friends and family. Even friends and family, I'd say you probably want to err on the side of caution with them. You want to be getting recommendations from investors, people that are doing full renovations, big projects, because that's what you need to be doing on your houses. You know, if your family and friends have had someone around to plaster a wall, That's great, but how good are they at plastering a whole house? How quick are they at turning those things around? So getting recommendations from the right people is really important. The other thing is look at reviews on Google. Are they on Google or Trustpilot? What's their reviews? How, what are people saying about them? Are they able to send you examples of previous work that you can have a look at, some before and afters? And also, are you able to speak to a couple of their previous clients on the phone or even in person to just see how they found the whole process of working with that builder? Number 5 is not having a plan. Okay, having a plan, I often think, comes down to having a schedule of works. So when it comes to the renovation especially, how quickly is it going to happen? What's happening on what weeks? Having a schedule of works, having the right contracts in place is part of your plan, making sure that you have the right budget in place, and making sure that you're keeping your team accountable so they're sticking to time, they're sticking to budget, and they're doing what you say that you want to do. But you cannot know what you want to do if you don't have a plan. We've all heard the whole, if you prepare to, what is it? You plan to fail, you fail to plan, you plan to fail. That's the one. We've all heard it before, but it is actually true. Number 6 is buying at market value. If you're buying at market value, then you are hoping that when you renovate it, it's going to really drive the price up. And I really recommend not doing this. Yes, if you want to renovate and add value, that's great. But if you're buying a property at market value, you are 100% living off of hope value that the money that you spend on the property will make money in the future. So what I would always say is do a combination of both, or even at the very least, make sure that you're buying below market value. It's the phrase I always say that I got taught, that I live by. The profit is in the purchase. If you buy a house that's worth £100,000 for 80,000, whether you then spend 20 grand doing it up to make it worth 130, 140, whether you do that or not, if you just need to sell it quickly the following month in an auction, or if you need to flog it, you're not losing money. And in some cases, you can just buy and sell in the same condition and still make a profit. Number 7 is not having a contingency. So I often factor in for things like your renovation costs about 15 to 20% of a contingency fund, but it's not just your renovation that you need to factor in a contingency for. You need to have a contingency for the end value. What if you sell it for 10% less than you're expecting? A contingency for time, so your holding costs, your council tax, your gas and electric, your interest rates, for whilst you're renovating, what if it takes a month or 2 longer than you're expecting? Have you got a contingency for time, for the end value, and also for your renovation costs? Now, those are 7 mistakes that a lot of people make, but I'm going to throw in just one more. The ones that I've just said previously are quite practical. Have a plan, make sure that you're doing the right due diligence, things that you can do. But the last thing that I want to say, and it's very, very important, and it's where I see most people tripping up when it comes to starting to flip houses, especially for beginners, is getting emotionally invested. If you get too emotionally invested and it becomes a passion project and you just love it so much, you're susceptible to overpay on the purchase price, overpay on the refurb, spend where you don't need to spend. And it also means that when it comes to the end value and selling it, you might have a slightly warped and unrealistic expectation of what the end value is because you're so emotionally invested with it. You see it with sellers all the time who have lived in a home and they're selling a home. They think it's worth so much more than it is because there's that sentimental, emotional value that they place on that just isn't there. So you need to look at it from an investment point of view. What money are you putting in? What money are you getting out? That's it. So those are the pitfalls that I would say most people fall into. Make sure you don't make those mistakes when you're going to flip a house, and good luck if you are going to flip a property. I wish you all the best. Now, if you want to start getting into property, but you may not have the capital right now to start investing in big renovation projects, I always recommend to people get started in deal packaging, deal selling, where you're finding good deals, you're finding serious investors, partnering them together and taking thousands of pounds as a fee. It helps you build up your pot, it helps you build up your skill set, and I'm running a full day of training on that. So if you're interested, make sure you find out more by clicking the link in the description or by checking out this video just here where I explain a little bit more about what deal packaging is. I hope you've enjoyed the video. I'll see you in the next one.